Thank you for joining the session. Please remain seated as we prepare the stage for the next panel. Ladies and gentlemen, welcome to the Milken Institute Global Investors Symposium. We are delighted to have you join us for this inaugural event in Hong Kong and look forward to your participation throughout the day. To open the program, please welcome to the stage Executive Vice President of MI International at the Institute, Laura Deal-Lacey.
Good morning. Welcome to the Global Investor Symposium 2024. This is the Milken Institute's first large-scale event in Hong Kong, and we're thrilled to be here. We're grateful for the warm reception from the Hong Kong business and investment community. The Milken Institute is, for those of you who don't know us, we are a not-for-profit global think tank. We focus on finance, health, and philanthropy. We are here in Hong Kong today because we believe in the importance of dialogue and peer-to-peer exchanges. In fact, in today's interconnected world, the significance of peer-to-peer collaboration among leaders from both sides of the Pacific cannot be overstated. These two economic powerhouses regions, they play a pivotal role in shaping the global economy, and collaboration is needed for sustainable growth and development. At the Milken Institute, we're not only advocating for bilateral collaboration. As we navigate the complexities of the global economy, it is essential that we embrace a spirit of cooperation and partnership with countries worldwide. By working together, investors can tackle common challenges, unlock new opportunities, and build a brighter future for all. During this symposium, you'll have the chance to exchange ideas, establish partnerships, and chart a course for the future of global investments. Let's seize this opportunity to have nuanced conversations that are deeper than the media headlines. And let's rise above as well in these conversations, above the noise of politics. Let's reaffirm our commitment to collaboration, innovation, and shared prosperity. Now I have the honor of introducing our esteemed guest, Paul Chan, the Minister of Finance of Hong Kong. Paul Chan has dedicated his career to shaping Hong Kong's economic landscape and driving its financial sector forward. Under his leadership, Hong Kong has flourished as a global financial hub, attracting investments and fostering innovation. This week of events, for those of you who don't know, this week is Hong Kong's Mega Finance Week. We're part of this this week, and this is all part of Paul Chan's strategic vision to bring global leaders back to Hong Kong. And we're so honored to be part of it, and thank you for inviting us to come. Now, please join me in extending a warm welcome to Minister Chan, and thank you once again for joining us.
Laura, Robin, distinguished guests, ladies and gentlemen, good morning. I'm very pleased to be here for the Milken Institute's inaugural Global Investors Symposium. This remarkable event gathers more than 550 senior executives from a broad range of industries. It also connects people around the world who are joining us online. A very warm welcome to you all. First, let me thank the Milken Institute for choosing Hong Kong to stage your very first Global Investors Symposium. The theme, Thriving Together, Bridging Global Markets, is indeed appropriate for all of us. I believe that Hong Kong is the best place in Asia, if not the world, for bridging global markets, for connecting business opportunities and business people such as yourselves. In the next couple of minutes, please allow me to update you on our economy and its outlook. Since last year, Hong Kong's economy has been recovering from the pandemic. In 2023, our economy grew by 3.2%, led by strong rebound in inbound tourism, private consumption, overall investment also improved. But high interest rate environment and geoeconomic fragmentation had dampened our merchandise export. Inflation remained at a low level at around 1.7%. While unemployment rate was at only 2.9%. We have also made good progress in attracting enterprises and talents to Hong Kong. Since the establishment of the Office for Attracting Strategic Enterprises in December 2022, we have attracted nearly 50 such companies to expand their business here. In the coming years, they will invest more than $5 billion US, creating over 13,000 jobs. Separately, Invest Hong Kong has also attracted more than 380 other companies, which together would invest another $7 to $8 billion US. For talents, we have approved around 160,000 applications under the various talent admission schemes since December 2022. And over 100,000 of them have already arrived in Hong Kong. On the capital front, new money is coming from the Middle East. Looking ahead, under a complex external environment, the Hong Kong economy is expected to grow by 2.5 to 3.5% in 2024 on account of improvement in merchandise exports, continued recovery of inbound tourism, and inflow of strategic enterprises and talents. All in all, the Hong Kong economy is solid and growing. The performance of our asset market, however, was less satisfactory. Residential property price dropped by nearly 7% last year, while the stock market fell by around 14%, both with reduced trading volume. This divergence in asset market performance and our underlying economy was caused not just by high interest rate environment, but perhaps also geopolitical tensions and its impact on capital flow and investment sentiment. Our policy response is that for the immediate term, bolster confidence, and in the medium to long term, promote high quality development. The immediate term measures include removing all demand side measures previously imposed on our residential property market, implementing the recommendations of the task force on enhancing stock market liquidity, energizing inbound tourism as a handle to further stimulate private consumption, organizing more mega events to promote the Hong Kong brand, and providing liquidity, business development, and digital transformation support to our SMEs. As to medium to long-term economic development, our strategy is to promote green development and digital economy, while pursuing the 8 centers development directions given to Hong Kong under the National 5-year plans. Ladies and gentlemen, the core competitive advantages of Hong Kong are the one country, two systems principle and the staunch support from the country. Under the one country, two systems arrangements, Hong Kong is the only city in the world where China advantages and international advantages converge. On the one hand, Hong Kong enjoys priority access to the mainland market and is the testing ground in China's gradual opening up of its financial markets and internationalization of the renminbi. On the other hand, Hong Kong continues to maintain our own legal system, a separate currency, free-flow of capital, goods, talents, and data, and our unique character as an international city aligning with the best international practices and standards. These unique advantages allow us to succeed as a super connector and super value adder, connecting people, capital, companies, projects, and opportunities from the mainland and all over the world. The best illustration of our unique status is our role as an international financial center. For its many aspects, let me share with you some latest updates. First, our listing platform. Last year, we set up a task force on enhancing the liquidity of our market. Now we are actively taking forward its recommendations. We will further enhance the listing regime by facilitating more quality international issuers and new capital to make use of our platform. We will improve the trading mechanism, lower costs, enhance services to investors, and step up market promotion. Second, mutual market access with the mainland. Since the Stock Connect was first rolled out 10 years ago, our Connect schemes with the mainland have become broader and deeper. They now cover also bonds, ETFs, and derivatives. Hong Kong is the trusted and preferred platform for international investors to get access to the mainland market. For example, over 70% of foreign holdings in offshore equities were held through northbound Connect. With the support of the mainland authorities, we have expanded the scope of Stock Connect to cover international companies so that when they come to Hong Kong for listing, they can have access to both international and mainland capital. Meanwhile, 24 of our major stocks on the exchange can be traded in both Hong Kong dollar and renminbi. This is an important step forward because holders of offshore renminbi now have more choices of investment allocation. Third is about asset and wealth management. At the end of 2022, we managed close to $4 trillion in assets. 2/3 of them come from outside of Hong Kong. We are striving to further enhance our competitiveness in this regard. Just this February, the mainland authorities approved enhancements to the Greater Bay Area Wealth Management Connect. With an affluent customer base of 87 million, our asset and wealth management sector is set to grow further. Meanwhile, to attract more family offices to Hong Kong, we have rolled out a series of policy measures, including tax concessions. We also launched a new capital investment entrance scheme earlier this month to attract wealthy and entrepreneurial family to come to Hong Kong. Fourth, offshore renminbi business hub. China's import and export accounting for some 14% of global trade. But trade settlement denominated in RMB accounts for just around 4%. As a reserve currency, RMB's share is even lower at only 2%. As the mainland develops closer economic ties with other regions, demand for RMB will become greater than ever. Here in Hong Kong, we are working to enhance the liquidity, the infrastructural support, and the ecosystem for offshore renminbi businesses. this will be an area with huge potential for Hong Kong. Fifth is about green and sustainable finance. This is an area Hong Kong plays a pioneer role in Asia. Over $80 billion in green debts and bonds were issued in Hong Kong in 2022. Bonds issued here accounting for around 1/3 of Asia's total. Meanwhile, there are around 220 ESG funds here, representing a year-on-year increase of 24%. The related assets under management have also recorded a year-on-year growth of 20%, reaching over 1.3 trillion Hong Kong dollar. And we have been rolling out new and experimental financial products, such as tokenized green bonds and securitized green projects. Just yesterday, we issued a vision statement on developing a sustainability disclosure ecosystem. We strive to be among the first jurisdictions to align local sustainability disclosure standards with ISSB's sustainability disclosure standards. And finally, on virtual and digital assets, they are new frontier. Hong Kong fully recognized the potential of blockchain in financial innovation. We have issued a policy statement on supporting the responsible and sustainable development of digital assets. Our city is the first to establish a comprehensive licensing regime for virtual asset service providers with proper investors and consumer protection. The principle is clear. Under the same activity, same risk, and same regulation approach, we put in place proper guardrails so that this financial innovation can flourish. And now we are planning to introduce a regulatory regime on stablecoins. Ladies and gentlemen, I have touched on several areas that are important to Hong Kong as an IFC of the future. This topic will continue to shape global business and financial agenda, and Hong Kong will continue to strengthen our super connector and super value-added roles in bridging global markets. I look forward to hearing more insights from the expert speakers at today's symposium. My heartfelt congratulations again to the Milken Institute for organizing this remarkable event. I wish you all a very fruitful day of symposium, and to our visitors, a wonderful stay here in Hong Kong. And to those of you watching live streaming, around the group, please do pay us a visit to experience firsthand this wonderful city is offering in terms of not just business, but also lifestyle and enjoyment. Thank you.